Hello guys, Happy New Year. Happy New Year to each and every one of you guys. So it has been a while guys, but here we are. So in today's video, I want to share with you how I personally trade DAX or German 40. It used to be German 30, but it's now German 40. I think they added 10 more companies to this index. I don't know why it still shows German 30 here, but anyways, so I've been trading this um, instrument for 3 years now, and my experience has been really wonderful trading this asset. So the concept I use on DAX is actually the ICT 2022 model, which is based on liquidity and market structure. And as you already know guys, I trade liquidity and market structure. I don't look at any other thing apart from structure and liquidity, because I personally believe this is what makes the market move the way we see it every single day. All right, so I basically use liquidity market structure, which is what we learned from the 2022 model from ICT, or the InnerCircle trader. Okay, so now if there is any other instrument that grabs liquidity like DAX, I don't know which one. I don't know which one, because DAX is the only instrument that I have witnessed for 3 years, and it does the same thing almost every single day. It will grab liquidity, and if you follow this video, you will be able to have an edge um, trading this instrument. So basically I use two major liquidity points, and that is the Asian high, Asian low. The second is the previous day's high and the previous day's low. Now you could be asking, why would you put Asian high and low to be the first and not the second, since previous day's high and low has the major liquidity? I do agree with you that the previous day's high and low, you know, uh, resides, so much liquidity. But the way I've noticed this instrument move, it mostly attacks the Asian high and the Asian low. Okay, so now if you write down these two major liquidity points that you're going to be using for DAX or German 40, and write them down, or since I'm going to be uploading this video on YouTube, as you are watching it on YouTube, you can still watch it as many times as you want. All right, so follow very carefully how I trade. And by the way, what I'm going to show you in this video is my first level of how I trade this. Yeah, that's the basic way, right? But this is one of the most effective way. I think this is I made money with this method of trading when I had a 200k funded account with was it with MFF or funding talent, which collapsed? I can't remember, but I had really good you know good income from this. All right, so I'm gonna put this in here, right there. All right, so imagine that we have, this is a full day of trading, but I just remembered something. The Asian high and low, the Asian session and the Asian range are two different things. So the Asian range and the Asian session are different things. Now The Asian session starts from um, uh, 2 a.m., which is EET or Eastern European time. It depending on my time where I live, it's 2 a.m. finish time. So you can translate that depending where you live. So 2 a.m. in the morning, that is when the Asian session starts. Another thing, you can also check that from the Forex Factory. It will show you the sessions depending with your location. Okay, so let's imagine this is a full day of trading, and then we have a crossover to the new day. All right, now when we have a crossover at midnight, remember midnight, not New York time. This is according to my time where I live, so translate that into your own time, into your local time, right? So now we cross over to a new day. This is what this vertical line, blue line represents. It's a crossover to a new day. Now the range before Asian session starts is actually the what is this? Uh, hmm, let me quickly check that on the Forex Factory so that I don't make any mistakes. Where? Just a second. Okay, so we have it's Sydney. We have Sydney and then Tokyo, which is Asian session, then Sydney, which is Australia. All right, so now the range before Asian session is the Sydney, right? But that's not our focus. The focus is from 2 a.m. when Asian session opens. So imagine Asia starts here and makes a low, and then it goes up, makes a swing low, and then makes a high, right? Now you might ask yourself, but at what point do we start looking for the setups? It is at 10 a.m. when London session opens. 10 a.m. Eastern European time. Now you can check that depending with your location what time it is, but according to my time it's 10 a.m. In the UK, for those in the UK, it's 8 a.m. I think 8 a.m. And some of those who are in Africa, in most countries it will be 10 a.m. or 9 a.m. I think so. I think for Nigerians it could be 9. I'm not sure. You have to check with that. So 10 a.m. we have London open. Now what I do, I mark the previous day's high, as you can see, and the previous day's low, and then I'm gonna mark not the opening of the Asian session, but the low. That means if price had opened here, makes a high, then goes down and makes a high like that before London opens, then the Asian low would be this one and not here. So take note of that. It's not the opening candle, but the low of the Asian session. So let's say it opened here and we didn't see price delivering lower. It just went up. So this is the low. And now if London opens here, that would be the high. I'm gonna change this to maybe dark. All right, so now I have highlighted my my liquidity points. So what I'm gonna do is wait for London to show me the buyers. Remember, the buyers will be based on liquidity and structure. So if price takes out Asia like this, my thinking is I'm going to wait for price to either reverse and break structure or to continue to attack the next pool of liquidity, which will be the previous day's high. Now, if price decides to break the previous low, like this, breaks the previous low, like that. Okay, we have a confirmation of price breaking BMS, break of market structure, and I'll make it blue like that. So now that price has grabbed Asian high and then has taken out the previous swing low, there is a shift in the market structure, and now my attention goes to the liquidity that lies at the Asian low and the previous day's low. These are my next targets. Why? Because after the grab of liquidity and a shift in structure, so price has given me two confirmations that are in line with the way I trade according to SMB, that is liquidity and structure. So those have been provided. So the next step is to see price coming back up, but to where? Now take note of this. This is how I use my fib. When price takes a swing low, most people would do this, that is okay, but I use the structure that has been taken out like that. I'll just zoom in for you guys. Oh, what's going on? All right, so now then what I do, or rather I can do this, I'll use this. Okay, so the middle line is the 50%. So from the swing low that has been broken to the high that was created, I'm gonna put my limit order at 50%. My stop loss goes at the swing high. Okay, not I can put it above it or exactly at the same level, it's okay. Let me explain why. Because my concept is when price has broken a level up to 50%, it means the setup has failed. Okay, so and then the target can either be this swing low or maybe the Asian low or the previous day's low, according to how to your trading methodology. But the way I do it, I don't set my my targets based on the next draw and liquidity. I use the risk to reward ratio. So 1 to 3 is roughly here, and so I'm gonna wait for price to come back up, hit 50, and then drops to the next pool of liquidity like that. And in the same way, how do I move this back in the middle? I don't know, because every time I click on my cursor it just moves on my right. That's very strange. Just give me a second. Give me a second. Let me see how. Right. Okay. I'll just use it this way. So now you've seen price grabbing this liquidity, and then I'll wait for price to hit 50%, target the next drawn liquidity, or just use risks to reward ratio. So this is basically how I trade. And then now this is the first step. All right, this is the first step. And then sometimes price will not grab any liquidity, and this is what will happen. Let's say London opens. I'll show you. Just a second. Red. Oh, yeah. And then Asian high. So this is what happens most of the time sometimes. So London will open here and doesn't grab any liquidity from here. Comes, respects this previous structure, goes up, then comes here, and on the lower time frame it doesn't form any reversal, then goes up like this. Here we are not given any entry on the lower time frame according to what I just showed you a minute ago. When this happens, it means price is targeting this high, which is previous this high, the next pool of liquidity. The way you trade it is, if this is a M5, you use your fib from here to here, this swing low that has been taken out to this low. And if you want, you can look for extra confirmation on M1 in form of, I'll show you when price comes back here, and then M1 will give you something like this, and then I'm not sure why it's misbehaving. Okay, so on M1 you will find this a reversal, and then from a 50%, again from a 50% you enter, and then you target the next liquidity. Let me repeat that. So if price has taken a high, Asian high, but then it doesn't give you an entry to sell, instead it breaks the previous high, it means the intention is to come and grab the liquidity above previous day's high. So you're going to put a 50% from here to here. Price will hit it. If you are confident enough, just enter here and put your stop loss here. If you are not, switch to M1 or even to the second time frame. Wait for a reversal when we make a high, a low, a high at 50%, and then you make your entry. All right, so this I've just shown you how you look for a reversal and which liquidity has to be taken for you to look for a reversal, and the kind of reversal you should be interested in. And I've just shown you what you do if no liquidity has been taken but the market structure is being formed, how you enter based on that structure and which liquidity you have to target. Now I'm not gonna go into more details, on the chart, but you can backtest this. I'm showing you things that you can backtest. We have some softwares that you can be using, like the FX Replay is a good software you can use to backtest this. TradingView, you can also backtest that. So I'll leave you guys to do the backtesting yourself, but let me just look for a few examples on the chart. I'll just pull up M5 and I'll put my session indicator. So now the blue one is Asian. As you can see, look down below here, it starts, this is Asia, it starts at 2 a.m. 2 a.m. This is Asia. Yeah, this is German 30. So Asia for German starts at 2 a.m. and then London starts at 10 a.m. Alright, now I'll start from today's price action. So we have Asia high. Where is the low? This is the low right here. and we have previous day's high, price already took it, previous day's low, right, like this. Now price during the Asian session, price took previous day's high. London opens here. When you wake up and you see this, it already shows you that price is going to be bearish because the previous day's high was taken. Now price opens London, takes out Asian session low right here. There you go. Let's look for a reverse on M1. As you can see, the reversal was not provided. Can you see? The reversal we're expecting is price to take out this previous structure, come back to 50%, and then go up. Was it given? No. But what do you think price provided? Since there was no reversal, price provided the second level I gave you. What level? When liquidity has been taken, but instead of price breaking structure to the upside, price has actually created an opposing structure, this up candle, to take price down. So how do you confirm this? Take your fib from the low of the structure to the high, and there it is. So this becomes your entry, stop above here or exactly at this high, and then you target the next liquidity. Suppose liquidity has taken this was taken, and then structure was broken, then your anticipation is we are buying this market. But that's not what happened. Price disrespected the structure, came up, filled this imbalance in here, and then dropped, created a structure that will support price to continue going down. What if you sell this and price takes you out? What if you sell this, price takes you out? That's okay, it's a loss. You move forward, move on. But then you could also wait. Now we have a valid shift in structure if that happens, and now when price comes back, you look for the 50%, which is the same thing. More examples. This was Friday 12. Asian high, price takes it. We are waiting. Let's go to M1. Let's see what happened. M1. There you go. There you go. Price breaks the previous structure in here, and 50%. You have some drawdown. That's okay. That happens sometimes. So 50%. Stop loss at here, or a little bit above if you want, and then your target lower. Then you also have another entry right here when price created a high, then breaks it, 50%. There is your second entry, stop loss above. So you have two entries in one setup, and then you can target the next pool of liquidity, which was grabbed right here, Asian session low. In here, in New York session, you can also look for an entry if it was provided. If not, then you leave it. So let's look for more. 11th of January, Asian session makes a high and a low. We break it right here. We take it and then we reverse. We go on a lower time frame. look for the entry right here in New York session. After the grab of liquidity from the Asian session low, price comes to this previous structure, price fails to break it, and then it goes lower. Now that price has failed to break the previous high after grabbing liquidity, this new structure gives us confidence that price is going lower. 50%, boom, it hits, stop loss here, and then price goes lower. I can go on and on and on. And if I switch to a higher time frame, just keep looking where the blue line is. You see how many times liquidity was grabbed from Asian here, Asian high taken, Asian low taken, price reverses. Here, Asian session low taken, price reverses. Here, Asian session high taken, price reverses. The low is taken, price also reverses in New York. I mean, it goes on, and this is how I've been trading DAX for as long as I remember. Okay, and when price disrespects, for example, I need one example, obviously. You can see here Asian session high taken, price reverses. Okay, I have it in this is New York session here. When price took Asian session, but it doesn't reverse, it kept going lower. It came for the full previous day's low, and after it took it, you can see we had a reversal. So you can go and back test this, guys. Let me know what you find, and you can watch this video as many times as you want for you to understand how this strategy works. And what else? Yeah, for questions, you can send me your questions on my Twitter or Instagram. Until next time, God bless you guys.